Welcome, everybody. Let's do this briefing and see what's going on in this crazy market. Make some sense out of it. We will apply the charts objectively, as we always do. We'll take a look at some sectors, the broader markets, a few stocks, and anything you might want to. So a little bit about what we do, how we do it, why we do it. And we look at the charts. As it says, objectively, what does that mean? Well, what that means is, for us, is to look at these through the eyes of price structure, without indicators. It's not about predicting, it's about following. And that kind of, I don't know, kind of rubs in our egos a little bit that we're not leading, we're following, but that's what we do. So the markets, they say is all knowing of all things, because all the opinions that are around the world, hedge funds, mutual funds, us, traders, whatever it is, all these different opinions, they come together in one place. So for us to think that we know better, sometimes maybe we do, just based on what the charts tell us. I mean, that's really the essence of what we do. We look at pictures and we combine them, as it says, in what we call techno-fundamentals, what's happening in multiple time frames, into market analysis, technical analysis. And there's so many different ways of approaching this idea of technical analysis. And it's a slippery path. And you go on looking at this, and we'll cover that a bit. But we look at stocks and options and ETFs, and we put that all together and take into consideration our risk, which is really the big part of succeeding at this. Look, you can easily find out, going to any webinar, what somebody believes is a buy setup or a sell setup or an opportunity. You can go into ChatGPT and ask, what is a buy setup on XYZ? It'll give you some kind of an answer. And it may be spot on, but without the risk considerations, which seems ridiculous. Why wouldn't you consider that? But most don't. That's the truth. So what's moving the markets, right? There's always news. Every day there's economic news, as long as the government doesn't shut down again, kind of become a joke. But what do those charts tell us about the news? What is the reaction to the news? And so we put that together, like not self-serving narratives or opinions. And as we do that, we come back to an objective market interpretation of price structure and intermarket analysis relationships, right? Wash, repeat. How do we do that? Well, this is how we do it. Those of you that have been MT Live for a while, that we've been doing these for years now, you see this screen, and this is our layout for making decisions, building strategies. Any of these by themselves is not a strategy, which will be right there, right? One concept is not a strategy. We have to align these, put them together into our trading plan. So I say price is king. Why? You can't trade without price. If you're a technical trader, you need the price. So why do so many overlay that with a lot of noise, with indicators? They want to smooth out the action. I get it. Sometimes charts are noisy, but that's a big message in there. Stay the hell out. Stay out. Go look somewhere else. Why candlesticks? Anything mystical and magical about them? No. You could do the same thing with a bar chart. It just allows us to see those pictures a little faster. It's just a better visual, easier visual to look at. Your eyes can get accustomed to bar charts and look at the same thing, but if I can make it easier, why not do it? Now, bar by bar analysis and voids, these are two big concepts. These were big aha moments, light bulb moments for me. as I looked at so many different setups, and the setup in themselves was like, okay, that's a buy setup, that's a sell setup, however I was defining it at the time. And then from there, why did one move and the other one didn't move? And this void concept, which we'll look more into, was a major answer to why prices trended. And it brings us back to some of the basics here, support and resistance, or the lack thereof. Well, what if there's no support or resistance, new all-time highs, or we'll look at some charts. Last Thursday was a big downdraft, which created a void, and prices are now moving up into that void. And they appear like maybe again, the S&Ps are going to go up to the top of the trading range. We apply bar by bar analysis. Bar by bar analysis, what is that? It's a concept, something I coined many years ago. And it's evolved in such a powerful thing because when I developed it years ago, it was to control my emotions. And its still purpose is to do that. However, at the time, it was like, I'd look at a certain candle. I was, involved in different candlestick patterns that whatever I was reading at the time, which eventually I proved to myself it wasn't worth it, right? While it was okay, a decent starting point for understanding candlesticks, it was limiting because all of these things create beliefs about when we look at charts and what do they communicate to us. And so it evolved to something that if I apply this bar by bar analysis, which evolved from, oh, that's a red bar, oh my God, it's going to go down. Well, no, you have to have a hierarchy of what is more powerful than others. So one bar doesn't trump a trend. One red bar is supposed to be a buying opportunity for those trading smaller time frames, right? It's a retracement, a 180 type of reversal, or it becomes a bottoming tail bar. We were talking about this in the green room just moments ago about 180s and bottoming tail bars and how they're the same thing if you understand retracements in multiple time frames. And then relative strength and weakness. Some do it in a very fancy way where they put relative strength charts on there, which is okay. It's, nothing wrong with that. But if I just look at two charts and I say one's going up and one's going down, well, relative strength, relative weakness. Sometimes we look at two stocks, like most recently, they're going down, but one was going down and the other one was going kind of slowly. So the one going down more slowly was showing relative weakness, or relative strength, I should say. Moving averages and volume. Many make such a big deal out of volume, but it's secondary. You can't trade the volume, but it's a piece of information, especially when it spikes, that it gives us some valuable information. For example, last week, if you looked at coin, COIN, the volume on the turn was tremendous. And what does that mean to us? Well, what it means is that institutions are buying it big time. And this was after it's been going down for a while. And those institutions will continue to buy on dips. So that's valuable information. And while I would look at the reversal bar there and where it occurred, I still think it's going to go up. But that volume, while secondary, in that instance was valuable information. But when you start applying volume in the, I would say, basic way, the way most would explain it is that, well, if prices are going to go up, they should go up on heavy volume, increasing volume. I would agree with that, but I've seen prices go up on low volume. So again, price is king. Prices should pull back on low volume. I would agree with that, but if it comes down on heavy volume and I get a reversal, bar by bar analysis, that's a buy setup. Internals. We're going to look at internals and into market analysis. We're going to look at that today, but those are other parts of the techno-fundamental point of view as to, hey, what are interest rates doing? What does that imply about the economy? And what does that imply about, say, financial stocks? What does the price of oil, how does that apply to truckers and airlines and whatever FedEx, that things that are moving information and technology. Position and money management and psychology, those are super important. No matter what you learn, if you don't have your head around the money management and the position management, the psychology will never be right. And your odds are you're just never going to make it. So these are really, really important parts of putting all of this together into a trading plan. So I've already mentioned the techno fundamentals, three-legged stool. Three-legged stool, you take one away, the stool tips over. So together, they create an environment that holds the platform together. So technicals, patterns, trends, support, resistance gives us specific entry points. And when you apply bar by bar analysis to that, it tells you the moment in time when prices are ready to move. Into market analysis, I've already mentioned, interest rates, what are bonds doing, what are commodities doing, and putting that together. And especially from a swing trading perspective, and as an investor as well, the more you go out to higher time frames, the more this techno-fundamental concepts come together in a much more powerful way. Whereas if you're a day trader, sure, knowing the direction of interest rates or the volatility index would definitely be helpful, but um, price on a smaller time frame, things are moving pretty fast. So, looking at that a little too closely probably could be a detriment to an intraday trader. But the initial information, as you start putting that together, really, really helpful. Internals. Swing trader, we're going to look at internals where they are right now. And, one of the things that you learn as you're doing this for a while is that the tools that you have, market environments can change. And so a couple of the things that I'll mention have changed over the years recently. So as intraday traders, we utilize what's called the NYSE tick indicator. And that tells us how many stocks are trading on upticks versus downticks at any moment in time. And over the last couple of years, prices have trended intraday without them hitting extremes. Sometimes they stay neutral for a long time. And that's, the breadth just being more equalized. It still hits extremes, but not like it did years ago. And breadth from a swing trading point of view has stayed more neutral recently. So you got to, roll with the flow is what's happening and make adjustments to it. And that's what, the focus is of the advisory swinging letter, where we get looking into market analysis and the market internals and putting that together on a weekly basis to create a bias. So again, as it says, we put this all together to see what the market conditions are. And as markets have come down, surprisingly, there was a big shift in sentiment over the last couple of weeks. And even though the markets have been in a sideways trend for a few months, all of a sudden, finally, option traders shifted away from this overwhelmingly bullish point of view with buying calls and moved more toward buying puts, protection, which means they're getting scared. They're getting nervous, and that's good. So as I said, you could read this here. This is how we approach charts. And when you're starting out, you approach charts, you look at them as head and shoulders tops, Haramis, dark cloud covers, whatever names you want to give it. And then eventually, especially if you're a master trader, you begin to look at that as a representation of what others think. What are their beliefs? As I said, they're pictures of others' beliefs and expectations created with money. And that should be internalized, because when you look at charts that way and you understand them, that when you look at, say, a climactic move to the downside, that's extreme fear. An accelerated climactic move to the upside, that's extreme greed. And those turning points, when you combine that with bar by bar analysis, when you get a powerful turn, some kind of a failure pattern, and as you combine the concepts, it's much more powerful in putting the odds in your favor. So, and it gives us this on an ongoing basis. That's what the bar by bar analysis does. And it speaks to us. I coined the term candle language because as I look at that, it allows me to change. So looking at an individual candle, while meaningful, I have to put that in the context of the trend in multiple time frames. So we're always combining these concepts to create a thought process. Now, you might say, what the hell is that, Greg? Well, this came about several years ago. The latest, greatest in indicator-based mythology in Ichikumi Cloud. And we look at this and say, oh, where's the prices? Oh, yeah, it's underneath the cloud. Well, what the hell does all of this mean? Well, it's supposed to tell you what's happening in different time frames and where support and resistance is. It does everything. You know, it's like a master indicator. And they sell classes on this stuff. And I don't know. I mean, for me, this just isn't it. As I says, are you a trader or a chart artist? It looks very colorful and nice, but we can put different things on this chart, like over here. Look at this reversal. I can see that this is going down. I don't need these colored lines to tell me it's going down. And when I see a larger green candle like that, followed by a larger red candle, it had tried to go up and it went down. That's a bearish 180. It's a range expansion bearish 180. So range expansion bars are more powerful than little bars. And as it begins to accelerate, that suggests it'll keep going down. Maybe it'll stall because as prices accelerate and ranges expand, many times prices stall, but that doesn't reverse the trend, and so on. So let's simplify candles. Make it really, really simple. There's big ones and there's little ones. And I say, well, what about all of those piercing patterns in dark cloud covers? Well, say, forget about them. Forget it. Are the candles big or are they little? Do they have tails? If they have tails, are the tails very big and long, or are they short? Are the ranges narrow? So as we look at these, and I see wide range bars, they're power bars. Just like last Thursday, that was a big red power bar. But that by itself is one piece of information. As I say, where is the location? Is it a trend? So when I see narrow bars, I say, well, what is a narrow bar? Well, you just look at the big ones and you say, oh, these ones are narrow. They're small. The bodies are small. And that means that there's not much going on. And if they're overlapping like this, the message is stay away. But if we could take this sideways movement in an uptrend, and I could take this candle and drag it over here, becomes a very powerful message. Or if I could take this bottoming tail candle, which was a red candle like this, prior to completion, and it retraced all the way back up again. If I could take this candle and drag it over here, and prices were in an uptrend, think about what happened there. What happened to traders when it traded under there? What was happening here? When we look at charts, we have to look at that chart, as I said, as a representation of what others are doing. What are their beliefs? So if this was preceded by an accelerated move, and I saw this, would tell me that momentum is slowing down. And as momentum slows down after a down move, there must have been some accumulation. What does that mean? Well, it means traders thought it was inexpensive and they should buy. Well, what we also know is what traders do. Short-term traders, intermediate-term traders, they all act in a similar way. Right? But if I was to take this candle and drag it over here, and prices traded under all of those lows, what happened? You can type in there if you choose to, or I'll just keep talking. But think about this. If traders are buying this area, what do these candles mean? Bar by bar analysis. It went up and it came down. Oh, it's going to go down. Oh, it went back inside that range. I'm not sure if it's going to go down. Bottoming tail bar. Oh, they bought the dip. It's going to go up. Made a lower low and it came back up. They keep buying the dip. It's going to go up. Then it gaps up and there's a red bar. You see how the thought process continues and it starts to build maybe some uncertainty about what's happening? Exactly, Robert. Confusion. But now, if it takes out those lows, I would assume there's going to be some stops there. And if it goes this, right, I want to drag this over here, those stops are taken out. What has happened? The effect of that, right, or another lifetime, 30 plus years ago, more than that, I was an auto mechanic. So I related to mechanics. Tell me about the mechanics of how something works. Well, if traders are buying and they think it's going to go up, some are going to put stop losses underneath there. So if this candle was over here and it takes out all those lows, some stops are going to get hit. So the mechanics of it is that it's going to remove supply. Okay, how is that? Well, because if they're accumulating here, they are going to sell in the future to make profits. That's what we do as traders. We buy at one point. If we can sell it higher, right, that becomes supply. So taking out the lows, the stops remove supply. That little shock pattern is really, really powerful. And if this was going up and it's in a downtrend and we took one of these topping tail candles where it broke out and then came back down, we look for it to go down. So as you combine this bar by bar analysis and put it in the context of trends, support, resistance, and the grouping of patterns, candles that preceded an event bar. Let's call these big ones event bars. So when that event happens and we put it in the concept of the location, we're really getting somewhere to putting the odds in our favor. So you can scan this, and I think Dan posted in there why Master Trader, but just go read it. I'm not going to, tell you a whole lot about that, but there's enough written there for you to make a consideration to become a student, to become a member in a newsletter or MT Advantage, which is a great service where these recordings, MT Lives, you get a history of them. Dan does a review of a real trade each week. Might be credit spreads, it may be directionals, maybe options, but that review and the history of those reviews build on themselves. And what we do, what everybody does with education, is you get the theory. It's the same thing. Trading, accountant, lawyer, a mechanic. You get the theory. And then you start to do it and you get experience. And then through repetition, you begin to learn of different nuances. So check that out. Trading plan. You got to have a trading plan. You need to have that guidance as to what you're going to do in different market environments. It's truly the key to success. Right? So as you make that plan, you see different market environments. This is what I'm going to do in a downtrend at resistance with this type of a pattern. And you put that all together, that gives you guidance. Well, if this happens and then that happens, what do I do? Do I reverse on the trade? Sometimes. And how did it happen? And you, again, applying bar by bar analysis and so on. We're going to look at a few charts. But it says some traders, a lot of traders at the beginning spend a little bit of time, not very much time, with doing that and learning. The patience and discipline You've all heard that. It can be more difficult to do because you're so anxious to get in there and do the trades and make money. But I strongly suggest you take it slower and trade small. Learn the master trader method. Start applying it, looking at the charts and trading small and money management, money management, say it again, money management, position management. That's truly your key to success. All right. Updates. This is a channel that Dan and I created a few weeks ago, and more coming in there. We post some trades, we post some videos, watch lists that we're interested in. So it's free. You don't even have to give us your email address. You can scan that, go in there. We do some updates. It's not the same as the green room, of course. But if you're in front of the screen during the day, getting an insight like the other day, I posted about the ETF, the defense ETF, the leveraged one, and showed the pattern there. It showed a chart. Say, hey, check this out. Dan posted a watch list of stocks. I posted a video of an answer that I gave to a student that had asked me some questions. So it's really a way of getting to know Dan and I with some initial information, which you're learning here. But it's really, really great. All right. Market internals. I'm going to show you the live ones today, but this is part of what we look at in the advisory letter, the ETF letter. And so this is a trend matrix that shows what happens week to week and which sectors are bullish or bearish, stay the hell away from. And so here, I think this was a few weeks ago. I'm going to show you the most recent one. And then these are the internal gauges, sentiment and breadth. We look for these to be in alignment with each other. And I go on and I explain about different ways these move over time. So this was a bullish when it moves that fast, like that. And now it's still like this, just whipping back and forth. And I'll show you these. And then we look at multiple time frames. That's what this is. This is a real quick way of saying, hey, what happened last week? And this would be what happened last week on the daily time frame. This is right now. On the weekly time frame, what happened 2 weeks ago? This is right now. And this is the monthly, which doesn't change very often. And ideally, when they're all in alignment like semiconductors, they should keep going up. So that's a sector to look for buy setups. Whereas computer software, right, has been getting killed, AI destroying it, right, all going down, and financials, how bad is it? Well, the daily being bad and the monthly and the weekly being up, rather have them all green, but they're not. So when you look at this, if you're in the ETF letter and you would see down, 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 and this trade to sideways, odds are it's making a transition to join the other time frames in alignment to move up. So this gives us an ongoing, continuous evaluation of what's happening in multiple time frames. This is something that I do and put in the letter every week. You see gold miners here shifted. It was all up and it shifted to sideways a couple of weeks ago. So it's a real quick, easy way of determining where money is flowing into and out of. Right. You can scan this. You can read about memberships, the advisory letter, the weekly options trader. These are credit spreads. Most of the time, we shoot for 5 days or less, but 10 days or less. Sometimes we go out to the second week, but these are really great. Dan manages them, does a fantastic job. The ETF letter and the chart of the week is free. Gets in your inbox on a weekly basis. I did one last week on accelerated moves and how to read them. And I just explained to you the advisory letter. All right, we looked at that already. And now I'm going to show you some charts. Give me a second here. All right, so this is current right now, what's happening. And this is something that gets reviewed in the advisory letter on a weekly basis. And I told you these sentiment gauges have pushed down toward these lower bands. And what happened actually here, right, that was yesterday. And I would say, in part, that's the reason the markets are moving up today. This is, well, by itself is one piece of information. Historically, this has been used as a short-term buy signal. When the equity put call ratio closes below 0.80, or this one here, let me say this one here at the top. So this one was, they were buying a lot of protection up there as it rallied up there. So things were shifting, but as prices are moving down, this was coming down to the bottom of the trading range. And all of a sudden at the bottom of the trading range, option traders start buying an overwhelming amount of puts versus calls. Usually get short-term relief. Right? It doesn't mean it's going to change the trend. This is an options expiration week, so there's a higher tendency for prices to not move too far away from where they started. So now they've moved up into the middle of the trading range. This is the S&P 500. And right around the whole number of 6,900, which it's been just whipping back and forth from over the last few months. Now, as it came down here, especially with the wide range bar last week, that implied it would power, that it could go lower. And maybe it will. So for example, assuming this closes like this, let's do a little bar by bar analysis, hypothetical bar by bar analysis. Let's assume it closes like this after coming off of the low. And tomorrow, again, put it in the context of being an options expiration, but what if it gaps up tomorrow and we see that? You immediately know that there was a huge shift from the prior day and it gapped up into where sellers should be, and it got knocked down in a big way. Now, unless it can get back above that high, I'm going to be thinking it's going to keep going down to the next support level. Right now, on a short-term basis, we've got this strength, and what we're looking for in the green room, right, and what most traders are going to be looking for is, can it hold on to that strength today? Right now, it's just sitting there, not doing too much of anything. Just looking at my other charts. Things are holding up relatively well, but that was after a nasty crack. Now we also look at short-term interest rates. There's going to be the FOMC notes in a little while. They talked about in the prior meeting, which we already know, right? They're pretty much thinking about sitting on their hands doing nothing. We look at interest rates. It's coming down real hard. And this market has been one in which a lot of whipsaws have occurred. So look at what happened here. Right? Interest rates were bottoming out. They broke out. They came up into resistance. And now they come all the way back down again. So here we thought, hey, they're going to keep going up. The economy is doing well. Why do interest rates go up? Demand for money or inflation. Those two reasons. And now all the way back down again. So there was this almost immediate shift from things are okay to things are getting terrible. And this is the yield curve, the difference between these yields. So this is still positive, and it was getting better and better, the spread between interest rates. And now it's come down a little bit, but still well above the zero line, which is trouble. This is a 30-year. And here's the NASDAQ 100, the Qs, right? Swing low, coming up into the middle of the range. Volatility index, day to day, we look at this throughout the trading day, and then on the end of day basis, the advancers minus decliners. So again, we're looking at these internal gauges to tell us how strong or how weak the markets are. The dollar, right? That looked like it was going to go down. There was a topping tail bar. And the dollar's just holding up here. Remember the way that came down so hard? There was lots of talk about the yen carry trade and how that was going to take the markets down. So you got to be careful with the news. Um, so many get so involved into things that they're predicting what's happening. And to some degree, we all make some predictions, right? We have to place a trade. But look, what does the chart say? Sideways, running in place, wide and whippy, a lot of uncertainty. Tech, has been weaker. And then oil, what is oil doing? Gold and the dollar. So we look at all of those things. Um, and then from there, we move to the S&P sectors. And so each week, just like in the trend matrix that I showed you, and let's just, I told you I'd show you the most recent one. Let's look at that. Here's the most recent one. I'll review. And so I do a video as well as looking at all of these in the letter, the swing letter and the advisory letter. We look at all of them because we have to take this and put in the context of the chart. So I look at the cues. Like I said, these have been in a downtrend. There was no change. I think this may have been side. Oh, this changed from up to sideways, the depth of the retracement. That's why this is yellow, which is basically caution, right? The Russell has been strong in all time frames. The transports have been strong. So this is a big positive for the markets. Right? Communication services shifted to a sideways trend. Right? Be careful. Aerospace and defense. Um, this is in the ETF letter. So I had posted in that Telegram channel the same thing, but with leveraged, assuming short-term traders use the leveraged one. Of course, we look at biotechs, we look at builders, and look at that in the context of interest rates. You can see down here, interest rates turned down. And so that's a positive for home builders and home construction. So that's been improving. We look at metals, pharmaceuticals. You can see all of these. So in the healthcare sector, there's been a big difference between different sectors. None of them really great, but medical devices just terrible. Right? That shifted to a downtrend on the weekly chart last week. And healthcare equipment is not doing well. Healthcare is not the place really to be right now at all. But semiconductors are still doing well. Software still bad. Telecom is good. Now, with that move down in interest rates, which would imply a belief that the economy is weakening, right? We see consumer discretionary weakening. That's in a downtrend. So that's in alignment with consumers aren't spending money, right? That's why this is getting sold. And we see interest rates going down. And so the opposite of that is what's going to happen with that information. If information starts to develop that says a weakening economy, this belief about interest rates and the Fed doing something where the prior meeting was like, oh, we're going to stand pat. Well, if the economy begins to weaken and the interest rates are going down, the bond market is now saying, hey, Fed chairman, what's that? The thing from Future where the guy bangs on the other guy's head? Hey, McFly, wake up, idiot. He's telling the Fed chairman, you need to cut interest rates. Things aren't good under the hood. So whatever you're thinking, and so this helps us guide us as well as I showed you the chart, the earlier one of the 13-week yields. And I can go back and look at that, but I'll put this down. And just that gives us a guidance as to what the Fed is doing. So we're keeping track of all of these. This is, the factory work that we do and share with subscribers in our different letters and in the green room. And so artificial intelligence, of course, AI, kind of like in the middle of things here, up on 2 time frames, down on the smaller time frame. We'll see if that can improve. Internet is just doing terrible. So again, this tells us about money flows. Are they going into and out of on a weekly basis? Let's go back here for a second. I told you interest rates. Here, as this line is moving down, they're going to cut, they're going to cut, they're going to cut. And now it flattens out. And so you can see the markets are giving us information. It's not about Greg and Dan predicting this is what the Fed's going to do. That's others come up with their predictions. We just look at what does the market tells us. And so as this flattened out and inched up a little bit, the Fed's not going to do anything. That's the belief of those that are creating this chart, which is banks, institutions. And so this starts going down. This starts to move lower, telling, hey, Fed guy, you better wake up. Otherwise, we're just going to make it worse. So, all right. So we need to now look at the charts. We see where money is flowing into and out of. And these are the S&P sectors, spiders, S&P 500, in a trading range. Industrials doing well. Technology, just a big old mess. Communications, another mess. Break out, back down, stay away. This isn't doing so great today. It's holding its own. Technology is doing better. Energy's consolidating. It's a little extended. Here's financials coming up to the 200 MA, coming up into minor resistance. Materials. This sector was the biggest whipsaw sector for several years. Now it's in a solid uptrend. Chemicals, it's just, they just keep buying the dip on that. This downtrend with the minus sign, that means it shifted to a downtrend on the daily time frame last week as this made that lower high. And look, it's holding the 200 MA discretionary. So it's holding for now, but it's broken down. And consumer staples, defensive sector, that's been doing well. There's healthcare. And these two, these were just huge wins in our ETF letter. Real estate, certainly helped by interest rates. We sold part of the position on the utilities yesterday. Why? Wide range bar. After a run up, it's going to stall. Some profit taking. In addition to, you can see it's looking to the left. It's up against some resistance. Just an obvious place where sellers are going to be, especially after a run like that. There's going to be profit taking. So sell some. Still looks like it's buyable on pullbacks. There's no reason to think otherwise. It came out of a nice consolidation. So now buyers should begin to show up. And real estate, that broke out. And I'm just scrunching. I can look at the weekly charts. So we look at weekly charts, multiple time frames in the letters as well. We do it through the matrix in the ETF letter, in the advisory letter. I do it through the charts. And I explain the charts every week in multiple time frames. We talk about how they look, had they shifted, like this shifted to an uptrend. And it did that earlier on the daily time frame. And that's where we got in this down here because it was bottoming. Look at the bottoming tail bar. It went all the way down and it came all the way back. So, and this is what is really powerful about this bar by bar analysis concept. I didn't know this was going to happen. And if you went and listened to the letters, which you'd hear me saying in the video, was this broke down and it's got a lot of room to fall. Why would I think anything else? That's what the chart told me. Okay, fine. Well, a few weeks later, there's a wide range bar up. That says, hey, Greg, we lied to you before. And they lied. That's what was happening. But something changed. What changed? I don't know. We could associate it with interest rate. Right. Said, hey, Greg, change your opinion. Right? We thought this. It's not your fault, Greg. You know what you told the subscribers is not your fault. Now it's a wide range bar up. So now Greg's like, wide range bar up, but it's into all of these pivots. That's not the place to buy. Red bar. It's consolidating. Bottoming tail bar. Okay. It's holding its own. And then I get one of these correction bars. Now they're screaming, okay, Greg, we accumulated enough on the dip. Now it's your turn. You can now buy. Because they proved to me what they were doing, what the institutions were doing at that time. And if we go and look at the utilities, I'm scrolling this back, they were doing amazing. And so I thought, okay, buy the dip. I thought over here, buy. They couldn't get it going. Here they had to do a little jiggle. But see this kind of move? We can look at this and say, oh, they purposely did that a jiggle. That's the wrong way to think. What happened was the majority said that it was time to buy this. And then they continued to buy. They bought the dip, they bought under the lows, and they pushed it up again. And then something changed. What changed? I don't know. Something in the news, something changed the belief. And when there's a shock like that, it tends to be violent. And so as it came down here, they started buying again. Now, this is where I really got interested because this was a wide range bar to the downside. And then it came all the way back up, taking out all these pivots. And that's when we said it's time to buy this. I don't remember the exact date, but as this was building here, it began to communicate they're continuing to buy. This pivot low, it's PL, it's just 3 higher low bars to the left and right. And as it forms that, I know they're going to show up again. Then I apply bar by bar analysis, and I see bullish 180. I see bottoming tail bars. The moving averages are getting real tight together. Should go up. Similarly over here, right? Try to break down. It came right back up again. Little downside shakeout failure. Bullish. It's going to go up. And so now, back to the weekly time frames, this is consolidating a little bit. I believe it's going to keep going up. And hopefully nothing dramatically changes that is going to shift that. But if something happens, the chart's going to tell me on the daily time frame. It's not telling me anything right now to change my bias other than this has the potential to go higher. And so we apply the same thing across the board. And from there, I'm going to shift to a different platform. Oh, let's look at the fangs over here. So the Magnificent Seven. Okay. We'll look at BOTZ. Magnificent Seven, Tesla. And I can scroll it to look at a weekly time frame. This is bottoming. It bottomed here before. It works the same in all time frames. And I like to say that technical analysis, if you approach it from what I said, pictures of what others believe, and looking to the left, you know where buyers were before. And traders will show up at where it was before, like Pavlov ringing the bell for the dogs. They're going to be there. That's a given. It's black and white. Your job now is to put this area in the context of multiple time frames and bar by bar analysis. So they're going to be down there before. I see a bottoming tail bar. They stepped up again. Now, this isn't a downtrend. This is a downtrend in the context of a sideways trend. So we got to put that in the context of what I just said. This is still in development mode, but it's improving. So far, it's beginning to make a higher low. Been sideways for a while. What, about 6 months or so, give or take? And what I would hope to see is some kind of wide range bar down here, but this is definitely keeping an eye on that. Amazon's broken down, so that doesn't look very appealing. Nothing to do there. Apple, institutions starting to whine a little bit that this isn't participating, but maybe it's improving. NVIDIA, They got a buy recommendation today. This is going to report earnings, I think, next week. So keep an eye on that. What I'm looking for here, bar by bar analysis, does it go sideways over here? And then will it break out? So I'm interested there. Microsoft, all software getting killed, beginning to create some support. Netflix is still dealing with Paramount. And the other one, Magnificent Seven, Google, that's broken down. So the Magnificent Seven not looking so magnificent anymore. Dan wanted me to look at BOTZ. That's sideways. So this is what we call bullish price action. I'd like to look at this on a weekly time frame. Looks good. Right? So there was the dip, and it going sideways there. So Dan, I want to look at this in the other platform to see what stocks are in it. But it's going sideways, building some support. And this is the kind of price action that you want to see after a momentum move. Remember, charts are a representation of what others believe. When there's a strong move to the upside, think about what thought does that create in traders and institutions. First of all, it broke these lows. Remember the mechanics of what happened when it takes out the lows when we looked at the candles? It removes supply. So that broke down while it was being bought here. Maybe just the market environment. Sometimes you get big wiggles, but then it came all the way back up again. When there's a strong momentum move like that, when prices roar, let's call that accumulation, and they move up strongly like that, what do traders think? What do you think when you see that? Yeah. Traders think, I'm going to buy the pullback, I'm going to buy the dip to some reference point. Well, when it starts doing this, now what does it communicate? It communicates that others think that it's going to go higher and I'm not going to get a chance to buy the dip. So they're getting in. Now, does that mean they're right? Not necessarily, but there are more traders that believe that they're not going to get the opportunity to buy that. So even though BOTS is at resistance to prior pivot highs, it's going sideways. That's what we call bullish price action. This is supply. Demand is absorbing that supply because they believe this is going to go up. So we're interested in if it can break out. And notice this bottoming tail bar. Right? The dip got bought. Who sells? Whoever bought over here. In reality, we don't care who they are individually, whether they're, a mutual fund or a hedge fund or some trader that got caught up there. We just simply look to the left and say, you know what? These traders somebody was buying up there and now they can get their money back. Remember, it's a representation of what others think. So don't overcomplicate it with a lot of, are they market makers? Are they Warren Buffett people? Who cares? This is supply. This is demand. The demand is increasing or it's holding. It's absorbing the supply. Call it bullish price action. It communicates that if it breaks out, those that are buying the dips, if they want in, they have to pay up. And that should drive it higher. And of course, higher to where? Is it new all-time highs? Yes, it is. I'm scrolling it back, but I've gone back far enough to say, you know what? There's no overhead resistance there. So it's a good setup. And as we go through all of these, right, and I'll just drag this down here. Okay. Let's drag this down here. And so here's the same S&P sectors right there. And I got the similar setup there of the different charts and mags in a different platform. And let's see what I have here. There's something else. Let's see over here. Let me look at this one here. I've got different layouts. Any of these layouts, once you become a member, you're welcome to have them if you use this platform, which we have no affiliation with this platform, but I've used it for decades and I've created these layouts. So what we could look at now, what I'm interested in, what I said to Dan, see, BOTZ, I can type OTZ, there we go. So now I'm interested, right, in the ETF for the reasons already explained. Okay. Here's the weekly chart, looks great. Here's the daily chart, the bullish price action. Now, what about individual stocks for swing trades? And these are different scans that are in the layout right here. There's a whole bunch of them right there. Shock patterns, breakdowns, breakouts. Are they coming to a moving average? Is it retouching moving averages and so on? But what I'm interested in here is to see, are there any big reversals? So this loaded the stocks that are in that particular ETF, and it'll do that with any of these that have the stocks in an ETF. It'll load them up there. So there's no range expansions. Are there any small ones? There's one. So here we go. Here's an individual stock. It's in the sector. Consolidating at resistance. But look, it had the same move down. It's up. And it isn't like, wow, but it's some of interesting. It's a little 20-something stock. I don't know. It should make new all-time highs. But I think we could find something better. What if we could find a 1, 2, 3? There are no 1, 2, 3s. Volume spikes. Here we go. That one had a volume spike. Right, within the last several days, it was a volume spike. And this one, well, of course, that one gapped up. And it gapped up on earnings. So this is definitely one to keep an eye on to see if it can hold on to this. It'll probably retrace a little bit, but when they gap up on earnings like that, they have a tendency to begin to build a new support area that'll drive it higher. Let's see here. Wide range bars. There's no wide range bars. Interesting. Are there any bearish ones? No. Do we have any bottoming tail? Here's a bottoming tail bar on a weekly time frame on AI. That's in a downtrend. This is better for a put spread, but it's a lower price one. And today is not done yet. So you can see there's different scans in here. Something that was below the 50 MA and got back above it. Nope. Losing it. Breakouts. Nope. So if we move to something else, the same thing, we look at a particular sector. What sector is doing well today? Healthcare information. It's coming off of a bottom. And the same thing. Well, what in the sector is doing well today? Okay, it broke down and it's moving back up again. These are the kind of patterns for me. I'm more interested in day trades for climactics and counter trend trades. This one, going to report earnings next week. You can see this tells you when the earnings are going to be, the sector and subsector that it's in. But something like this is more of a put spread type of a pattern. You got the weekly. It's close to some support, but you just go in here and open up the options chain. And we'd say, show me the puts. And then are there any premium down there at $50? Put more strikes. There might be because option, going to report earnings next week, but And look, the spread is just too wide. There's no interest, and we're not going to do anything in front of earnings this week. But this is how we find credit spread trades for the weekly options trader. We can see if there's any bullish 180s. So there's one. That looks great. Maybe it needs to consolidate a little bit. Yep, IGV looks good, but wide range bar into the top of the range. So now what I'd like to see is a little sideways price action at the top of the range, and that's near new all-time highs. So multiple time frames in an uptrend. It's been consolidating erratically for a while. Earnings are next week. So that puts a little bit of a kink in it, but this shows that there's anticipation that this number should be good. All right. Dan suggests I look at IGV, which is in the ETF letter. Different pattern. This is software. It's gotten killed. It's in an area of major support. So there's reasons why we're doing this. It's early, which is okay for the ETF letter. We're not looking to get in and out of something, really quick, like the advisory letter, a swing trade, 2 to 10 days, give or take, in and out, get the money. But this is being accumulated, and I think if it can get moving, it has the potential to come up here. And then from that point, maybe selling covered calls. There's an unfilled gap up here. That would be the start of a turn in the software sector. And from the individual stock sector, we do the same thing. Look at all the 180s that are here in this. So this is a little messy. So when we read charts, there are attributes that immediately are going to catch my eye. How far did it retrace? Where did it come from? What do the moving averages look like? What are the size of the bars? Are there red bars ignored? Are there bottoming tail bars? Can that red bar be ignored? I look at the higher time frame. It's in a consolidation. So will this be able to absorb the supply that's here after the depth of this retracement that took out 2 areas of major resistance? So this is developing. It's going to report earnings tomorrow. This could either explode or collapse, depending on that number. But it got bought big time. It's all builds a thought process. Oracle software been getting killed. Just not interested yet. There's no wide range bars. So remember when we looked at the candles and I said, if I could drag that big bottoming tail candle and pull it over next to the little candles, what if I could do that? What if that candle developed here where tomorrow, right, it formed something like this? That's the power of bar by bar analysis. So if I see something like this, right away I'm going to be thinking, is there premium to do a put spread? Because that communicates strong buying on a dip. Can I do it directionally? Yes. On a short-term basis, I think a pattern like that would produce a move to the upside, where I would just be looking for a very short-term trade because it's in a downtrend in multiple time frames. So right now, there's just nothing to do. Little candles, it's in a downtrend. Relative weakness. Why is it relative weakness? Why? Because I can type here. Hold on a second. Look at the candle today in the Qs. It's a big candle off of the low. Oracle, it's got little candles. They're not even taking out yesterday's high. I'm not interested in that. So there's a whole big thought process that goes on here. And as time goes on, taking a course right? Whether it's the swing course, the bar by bar analysis course, or an options course. And then through the mentorship of the letters, and always you can ask Dan and I questions, that repetition, your brain begins to operate in this way, where it's just part of an ongoing thought process where you look at you look at a chart like this and you say, well, that's bottoming, it's acting well. But in comparison to the cues, it's showing relative weakness and there's no wide range bars. So I'm just not interested in this yet. I'm going to go look for something else that would have a bottoming tail bar or some other pattern that would communicate to me a high probability of a turn. I'm over time. I talk too much, but I hope you guys enjoyed this and take advantage of the offers that we provided, 2-to-1 on any of the letters of the green room. And yeah, if you have questions, email us, Greg and Dan at Master Trader. We'll be back in a couple of weeks. Bye-bye for now.